Hi there. Good morning, good afternoon, good evening. Thank you all from joining for us from everywhere. It's now about 4 months since I last spoke with this superb panel, and already a lot has changed. COVID-19 and its impact on the economy and the art world is continuing for, I think it's fair to say, longer than any of us expected. Most art galleries have now reopened in some form or other, but with no travel and limited in-person events, they're still having to find ways to adjust. Based on surveys with nearly 800 gallerists and 360 collectors in the modern and contemporary art fields, Clare McAndrew, the founder of Arts Economics, has pulled together the first and very comprehensive report on what the impact has been on the sector for the first half of this year. Plus, she's looked at the outlook for the rest of 2020 and beyond. Today, she'll talk us through the top-level findings, and I will then discuss their context and implications with her and with Paul Donovan, the Global Wealth Management Chief Economist for UBS, talking to us today from Wiltshire, and with Noah Horowitz, the Director of Americas from Art Basel, who joins us today from New York. I will then open up to your questions, to viewer questions, which you can put to us at any point during the conversation through the box you see below us. And we will try to get to as many of those as possible this afternoon. So, Clare from Dublin, thank you as ever for your insights. Could you take us now through the top level findings, please?
Absolutely. Thank you, Melanie. And I just want to say a quick thank you to all the galleries that took part in the research. Obviously, it's a very stressful, trying time for a lot of businesses. And they really kind of engaged with the survey and with interviews. So I wanted to thank them. A lot of what we found in the survey is actually reflecting the anecdotal things we were hearing. That's, sales are down 30 to 40%. And that's what we saw in the survey. The average for galleries was that their sales dropped 36% compared to the same period in the first 6 months last year. And there was declines across the board. I mean, you can see in the chart that galleries were turning over less than 500,000, probably fared a little bit worse. And a particularly traumatized segment was those between 250,000 and 500,000. They saw the biggest decline in sales of 47%. And they're also the least optimistic about what their whole sales will be for the year. But I think 80% it was overall of galleries didn't think their sales were going to increase this year. So it wasn't a good year for sale. It wasn't a good period for sales. And we kind of expected that. And as I said, it reflected what we were hearing anecdotally in the sector. I think sales can go up and down a little bit. What is a real concern for galleries and for the sector as a whole is employment. And 1/3 of galleries in that first 6 months of 2020 downsized their galleries, their employment. And, the average that we were starting with was only 8 people, and that's including full-time and part-time and contractual employees, and the average downsizing was 4 people. So that's a big decline in what is mainly kind of small businesses in the sector. The biggest losses were obviously in the biggest companies, the big multi-premises galleries, but there was losses overall. And if you look again at that segment between 250 and 500,000, I suppose you'd call that the kind of small to mid-sized galleries. They started out in the beginning of 2020 with an average of 5 employees, and 38% of those galleries downsized. And I mean, we asked them how they saw this playing out for the rest of the year. And most of them do think that that employment will stabilize. But I think rather than that being an optimistic thing, it's perhaps that they've gone down to the lowest feasible level that they could go down to. So this is a big worry for them going forward. A lot of galleries really reliant on the supports, the income supports and salary supports they've been getting from various governments. And these are starting to taper off. I know they finished here in Ireland this week. So they're all starting to taper off, and this is going to be a big concern going forward. If we look at how galleries have actually made sales, I think the online, obviously with the lockdowns in various countries of different varying lengths, online has been a huge lifeline for many galleries. And we can see that it's shifted from about 10% in 2019 to 37% on average in the first half of 2020. So it's been a very large increase. Smaller galleries were probably doing a little bit more online to start with. So the biggest increases is actually the biggest galleries and their online component. But I suppose the flip side of that is they had the biggest fair sales to start with. So fairs have gone down from 46% on average to just 16%. But the ways people are making sales has obviously been radically different in this period. I think it's interesting to look at who's buying online and who they're selling to, because the online channel is obviously touted as a way to kind of reach perhaps geographically diverse buyers and new buyers. But in fact, during this kind of crisis period in the first 6 months of the year, most of the online sales were to Gallery's own clients, so regular clients of the gallery. 84% of sales went to people they already had established relationships with, and only 26% went to new buyers. And that again fits with the kind of anecdotes from both collectors and dealers who said they're kind of sticking with the galleries they know, and they've been heavily reliant on their regular clients during this period. And I think all of this, if you look at, we asked galleries what their top priorities were and how they changed. I think you can see all of these trends coming through, and you can see the shifts. If you look at last year, the top 3 priorities for galleries were their art fairs, their current artist exhibitions, and widening the geographical reach of their client base. And then you shift to 2020, it's about increasing online sales. It's about reducing costs and trying to maintain some kind of profitability and keeping relationships with existing collectors. And then if you look at next year or the next 1 to 2 years, again, online isn't a transient thing. There's still going to be a huge focus on online, and they're moving again to then considering a wider geographical reach again, as well as keeping their established clients. So there's been some big changes over the last 6 months in the sector.
Thank you very much indeed, Claire. All very sobering, but also very thought-provoking. I just wondered if I could ask you a little bit more about that increased polarization we're seeing between the established players and those further down the food chain. What are the dynamics that have contributed to that increased polarity?
Well, I think this crisis is obviously going to be the most difficult for businesses that were already, financially risky going into it. And I think it's been difficult for galleries at all levels, and we're going to see by the end of the year how that plays out and the full picture. But I think galleries in general are obviously in a particularly vulnerable industry. They're so reliant on events and travel, and it's all about kind of discretionary, non-essential spending. But as you say, on top of that, we had this kind of winner-take-all, very top-heavy market. So the extent to which I think the economic implications of this crisis accelerate the decline of any smaller business that were perhaps more financially risky going into the crisis, and strengthen some of the bigger business whose perhaps their buyers or their artists are a little bit more insulated from what's been going on. That will extend that divide. But I think certainly at the moment anyway, that, galleries at all levels are being forced to kind of review what they're doing, their strategies. And, it's about how you went into the crisis, how good your relationships were and your balance sheet was going into the crisis, and also how adaptable you can be to some of the new realities that are coming out this end, the new strategies and consumer behaviors and the new just economic realities that we're going to face.
Yes, thank you. I think I read actually in the report that it was the smaller galleries, the much smaller galleries, who were described as the most optimistic. Is that to do with that ability to adapt quickly, or is it just that younger people are more optimistic?
Well, I think there was 23% thought the sales would increase. So still a minority are probably, probably, but there was twice the average, and it could be a range of things. It could be anything from the price points they're selling at to being smaller and nimble, to doing quite a bit of online sales as it was before, and maybe slightly less. If you look at that, they were less reliant on fair sales and things like that to start with. They're also very dependent on the support measures. So we'll see how that optimism plays out. I mean, this is part of a two-part series of research that we're going to follow up with at the end of the year. So it'll be interesting to see how that that plays out. But again, I think the trouble spot really is the more small to mid-size, who were probably slightly more financially stretched. They did rely on fairs, especially for kind of outreach, and they didn't have that padding that some of the financial padding that perhaps some of the larger galleries have.
Thank you. Noah, I wonder if you could just pick up a little bit here, if you had any thoughts on this, best or biggest versus the rest situation, but also the point Claire was making about the slightly more risk-averse nature of both of the galleries and of the buyers. Is our world getting narrower, and is that something we just have to accept for now?
Yeah, thanks, Melanie. Thanks, Claire. Thanks, everybody, by the way, that's watching. This is super interesting stuff. I think the reality with this question, Melanie, is that a lot is the balance, the verdict, so to speak, is still to be determined. I think, as Claire mentioned, also with some of the funding support that galleries have received over the first half of the year, I suspect that it's possible that that's embedded within some of that confidence that you're seeing with some of the smaller galleries that got some of that funding and are relieved, at least in the near term, to have benefited from that. Clearly, we've seen for some time this broader discussion around mega galleries taking more of the air out of the market and putting downward pressure on many of the mid-sized galleries and larger mid-sized galleries, in turn putting pressure on those below them. Where we stand now in September 2020, it's a little tough to say, actually. We haven't seen the gallery closures or restructurings, perhaps, that some may have expected by this stage, given the state of how COVID has impacted the industry that we operate in, as well as the broader travel and retail sectors. So at that end, I'd say the balance is out. One thing that I think that we could point to also that comes through in Claire's research is the fact that although it's been a tough market, collectors still are purchasing based on the data that we gathered from the Collectors survey with UBS. Here we can see already that through the first half of this year, things are tracking well, at least in a reasonable sense relative to where they were previously. So there is liquidity, there's movement in the market, which I think certainly can help support many of these smaller galleries and mid-sized galleries through this. Obviously, many of the larger galleries as well, especially as they refine their business strategies and adjust costs. There's been a lot of discussion, we can come back to this in a little bit, about galleries reopening now as we hit September, about moves to, say, the Hamptons or the Hudson Valley here in New York. I got an email last night from Jacqueline Martins, who's a wonderful Brazilian gallery, who sent an email announcing her opening this month in Brussels. So there is still movement happening. We'll see where that goes. One of the more interesting things, I think, from the report as well is this statistic that Claire found, that I think 59% of collectors surveyed said that COVID actually made them more interested in acquiring art, despite it all. And that was one of these wonderful contrarian findings of the report. And we see that through this data, that collectors are engaged. Clearly, I think we can expect sales values and volumes, as we've already seen through the with sales coming down by about a third through the first half of the year. They will be down this year. There's no doubt about that. Nevertheless, stock markets are moving. The broader, despite it all, parameters of the world are relatively all right thus far. I think the other interesting dynamic that we're seeing here that will have great bearing for the latter half of the year and as we head into next is this question about where collectors put their weight in terms of galleries they have existing relationships with versus those that they don't. And we see in this slide here that for the most part, again, as Claire was stating, collectors have aligned largely to galleries and also to some extent to artists that they're already familiar with. An interesting bit of contrarian finding here is that the boomer generation is actually the one that was the most interested in looking for new galleries, which runs a little contrary to what we might have thought about younger collectors being active in that capacity. Now, that may change over time. There are a variety of reasons for that, perhaps because those collectors are a little more sedentary, have built their collections, or a little less reliant on individual galleries or outlets. They're also a bit more interested in spreading the love, so to speak. So we'll see how this develops as this dynamic plays out. But clearly, this push and pull between the larger mega galleries, who certainly are potentially well positioned within this to continue to take a larger piece of the pie, will settle relative to the rest. I suspect as well, and we see a lot of this data that Claire so diligently unpacked on how the digital has transformed this. In the early stages, of course, a lot of this has played directly into the hands of those that are better known. I suspect that as this plays out and as collectors on a whole become more comfortable looking at and buying and selling artworks online, that will diversify and that will spread further, and we'll see who ultimately that plays into. But certainly this is an incredibly important dynamic, and something that, Art Basel as an organization, in terms of continuously trying to put and support galleries from throughout the art world at all different parts of the market, will continue to focus on.
Thank you very much, Noah. And yes, I do think these little details, like the fact that the boomer generations are the ones being a bit more adventurous now, are part of what's great coming out of the report. And I will also pick up on some of those collector trends. But Paul, while we've got you, thank you so much for joining us again today. I just wondered if we could take a step a bit broader and have a look at how the behavior of the wealthy has played out since we last spoke. You say in your report, I think in the UBS part of the report, it compares lockdown to switching a light off and then switching it back on again. Is it fully on now?
We're not quite fully on, but there is a sort of a fairly abrupt ending to lockdown. And that actually has two implications when we look at broader spending behavior. So the first is, obviously, you can actually leave your house and go out and spend. So there's the simple legal restrictions being lifted. You may have to change your behavior, social distancing, masks, all of that, but you've got that freedom. But then second, I think what the ending of lockdown has also reflected is a decline in fear about the virus. And this is the key thing, because when we're talking about consumers' willingness to spend, particularly on perhaps more expensive items, it's not the virus that stops them from doing that, it's fear that stops them from doing that. And we have seen this very distinct reduction in fear. So what's been happening since the end of the second quarter is across the board, across all income spectrums, we've seen an increase in spending. And spending on stuff, spending on goods, spending on furnishings, furniture for the home. You've been stuck indoors for the last 3 months. You're fed up with looking at your surroundings. You've decided to do something about it. So we've had all of that coming through. And of course, the wealthier consumer has more money to spend, at least as far as Europe and the US is concerned. Because what happened in Europe and the US was that most people had no drop in income. We talked about this last time, I think. But when we look at the patterns of spending, the lockdown caused lower income groups to cut spending by about 20%, but higher income groups cut by about 35%. And that was simply because higher income groups buy more services, and services was the thing that you really couldn't consume. So what that's meant is that higher income groups accumulated a month or more of income in the form of savings, and that's what they've been going out to spend. So the wealthier group, like everyone else, is going out to spend. It's been part of the pickup in consumption that has led the bounce back, but the wealthier group has got more firepower relative to income than lower income groups have had.
That's great. Thank you. I love the idea of saving on services and spending on art. Long may that continue. I just wondered also what the impact, because until I think this week that the stock markets have been quite resilient. Has that helped this decline in fear?
So the equity markets have been reacting to policy. They've also been reacting to the fact that the economic recovery has been stronger than expected. So there's sort of this symbiotic relationship that fear goes down, so the equity market goes up, so fear goes down a bit further. So you do have that element coming through as well. And we've seen other asset prices. I mean, real estate prices have also been moving up as well as the real estate market has come back in. So I think that this is symptomatic of a lower level of fear, but also of the fact that the economy, whilst it undoubtedly has been very badly affected, I mean, we can't ignore that, but it hasn't been sort of the black hole of despair that a lot of commentators were talking about when we were last speaking. Things actually have turned out to be better. And that's now been reflected as well in asset prices more generally. So I think it's all part and parcel of this bigger picture of reduced fear and somewhat better, somewhat faster economic recovery than people had anticipated.
Thank you very much. No, I just wondered if you could pick up a bit on that, because I know you've been talking to galleries separately. I think you've been out to the Hamptons, if I'm correct, as you mentioned. But what have they been saying to you anecdotally? Have they also reported this kind of this enthusiasm and just some pickup, people wanting to decorate the homes they've been stuck in?
Yeah, I think there's a lot of flags or cautions to state.
Sure.
And Paul did as well, I think, with the economy and people's confidence, right? Let's not mistake the fact that there's a lot happening here, especially in the U.S. context since we last spoke, both economically. Obviously, the looming reality of the election has a lot of people on edge, not to mention all the social dynamics that have played out in the U.S. market. Having said that, many people that I spoke to recently, I'm based here in New York. I did a day trip out to the Hamptons the week before last to see what was going out there and just to get a sense of all these new galleries that have started sprouting up between Southampton, East Hampton, so on and so forth. The general mood was quite upbeat. Claire and I were discussing this yesterday. Most people that I talked to said that July and August were strong. Now, that could be off of a very low historic baseline. Not forget the fact that Art Basel in June is usually the closure, followed shortly thereafter by the London auctions of the season. And July and August are typically a time off for our industry. People, especially in Europe, take their holidays very seriously and they go quiet. Clearly, the world is upside down now. That's not the case. And most people that I talked to were reporting a steady uptick in sales and interactions. They're seeing people that had vacated, say, New York, et cetera, et cetera. So I think there is a certain degree of momentum. I would just caution that that's guarded. I'd also doubly caution that the Hamptons is not a template for the rest of the world by any stretch. Having said that, it's not just the mega galleries that are there. It's not just the mega galleries that are upstate. And so there is something to it. We'll learn more in the next weeks as galleries reopen. I know the Berlin Gallery Weekend is happening now in Germany. There are other developments, at the horizon. But I think, as Paul said, from a consumption standpoint, a lot of our clients, which is to say high net worth individuals that collect art regularly, they haven't been traveling, they haven't been spending their money on that wider variety of services, and they've been decorating their homes, and many have been very quietly and assiduously buying art, building their collections, and getting better access to pieces, not at any great discount from what I can gather, but they're getting to the front of the line for artists that there were long waiting lists for before. They're filling holes in their collections, and these are important things. And from our vantage, we hope that this continues, and we hope that it flows well beyond those that are consolidated, just in the eastern end of Long Island.
Yes, so perhaps as Paul says, we just couch this as it's not quite as bad as it could possibly have been for a small subset of very wealthy people. Thank you for that. I just wondered if we could now have a look at some of the dynamics of online sales, Claire, that you mentioned. Obviously, as expected, quite a lot of business has had to move online, and it looks like that slice of the pie has grown as art fairs and other sales channels have fallen. Could you just break down a little bit or characterize for us which strategies have worked best online, because it's a fairly big area?
Yeah, for sure. I think it's been a kind of, as I said, a lifeline for a lot of galleries, and we asked them what kind of strategies they were engaging with online. And it's interesting to see from the results, if you can see them kind of stacked up there, that they've tried a lot of different things, but the ones that are the most popular and that have been used the most are the ones that kind of focus most on kind of content and storytelling and positioning the gallery, rather than just purely on kind of commercial sales. And I think it's interesting. I mean, I'm working on this research with a sociologist, Taylor Witten-Brown from Duke University, and we're looking at the whole area of what organizations do in crisis. And there's kind of different strategies. Some people hunker down, do what they know. Some people kind of innovate completely. And one common strategy is to try and mimic what they believe successful peers are doing. It's a way to kind of navigate this kind of risky period, is to kind of copy what they think successful companies are doing. And we have seen quite a lot of galleries doing similar things. And obviously that works well up to a point, but past that, the kind of a pressure to conform can become an issue, and it gets more difficult to kind of stand out and get attention. And we've seen that from collectors, anecdotally again, that there's a wash of things coming at them online, and it's more difficult for galleries to stand out and to kind of signal their quality and content. And I think not all strategies fit every gallery. If you look at things like virtual reality and augmented reality, there's a lot of talk about them, but we found they were actually the lowest used of all those tools. And there's various reasons for this. Sometimes they just don't fit for the context, and that some galleries would prefer a more old school approach. I mean, a lot of galleries said they're still using the phone a lot to call people during this period, keeping it slightly more personal than as a kind of a complementary strategy to online. But I think it's they're using a range of strategies, but it's a way to signal quality and to get attention in the first place. There's been a lot of galleries trying things, and again, with all of these things, the things that work well during this period will be maintained. And I think that even during this period, the survey showed that about a quarter of galleries weren't making any sales at all online.
If I was going to ask about
what are they doing? Yeah,
is that a bit worrying?
It's worrying in a way that galleries were closed. I think over 90% of the galleries had a period of closure. So you think, how are they accessing people? But I mean, a lot of people said, both anecdotally and in the survey, that they were using the phone. They were finding ways to kind of video conference and things like that, rather than pursuing what we might see as more traditional kind of e-commerce. There's different ways to access consumers. But having said that, the ones that had made no online sales, that were kind of new to online, they went from 0 to 27% on average. So it's a huge increase for those that didn't do it before. But again, I think most galleries are trying a combination. But I think it is interesting that the storytelling, positioning, content-driven strategies were the highest used during the period, rather than the purely kind of commercial strategies.
And those are mostly from their own websites, is it? That seems to be from their own websites, and there was a high take-up of online viewing rooms at fairs, from both the collector side and from the gallery side. But on the gallery side, it was the highest percentage were from their own platforms and viewing rooms. Lovely. Thank you. And one other observation I found very interesting, and maybe it's connected to online, of course, but in your report, you find that millennials, who are you define as age sort of 23 to 38 years old, are the most active buyers just now in this area and at high levels. Paul, I just wondered if you were finding the same thing in the broader luxury arena. Are we seeing a meaningful changing of the guard?
Well, unfortunately, we don't have great quality data here, but anecdotally and just logically, you would expect the millennials to have a little bit more firepower, because, of course, the traditional stereotype that the millennial has in the past spent on experiences. They're mainly interested in acquiring suitable backgrounds for their Instagram or TikTok or whatever it is, and that's just not been possible during lockdown, and more to the point, it's not likely to be possible for a period of time hereafter. And so that group has suddenly acquired more disposable income than perhaps they would otherwise have, because they don't spend so much on housing. They don't spend so much on goods, generally speaking. They have been more biased to experiences, which are services. So you would expect that group to perhaps be a little bit more active in areas of the economy that they traditionally have played a lower role or a lower level of importance. So I'm not particularly surprised to see that millennials are playing a somewhat more active role here.
Thank you. And you've led me nicely. Talking about experiences, no, I'm sorry. I think a lot of us are sorry to see that Art Basel is now not happening in Miami and therefore not having any art fairs this year. But you also see in Claire's report there's something of a relief from a cost point of view for galleries, but they also have some reservations about the online viewing room, the OVR experience. How do you see all this playing out now that sort of OVRs are here to stay?
Yeah, I guess a few things on the topic. I mean, it's obviously very complex. I think we've all heard many people, complaining about how busy they've been, how much travel they do, how dizzying it all is. I've also never heard more people very earnestly tell me how much they wish that they could get back to an art fair over the last a few weeks and months. So I think people are desperately wanting this. You have to bear in mind, and here's the data that Clare found on art fair predictions both this year and then looking into the future. I mean, I think we need to be prepared, setting aside the reality of 2020, which in the real, so to speak, at events such as this. So although there have been some smaller European fairs that have alighted over the last weeks, the reality is that this is going to be the new reality. We're already seeing galleries in Clare's reports over the last year or two being a bit more calculated and strategic. I think COVID has with so many different things, whether it was digitization, e-commerce, et cetera, brought a lot of changes that were bound to take place over the next many years, and has really just brought them into the very present future. So looking into the future, we need to be mindful of the fact that this is going to some level be the case. Galleries are going to be more calculated, put certain pressure on fairs. As it relates to OVRs, what's interesting also in Clare's report is that we do see, at least through the first half of this year, in this totally new realm, collectors not only coming to these platforms to look at and view art, but a significant amount, 40-some%, using these platforms to buy art as well, both on the fair platforms, via the galleries, and of course, through the auctions as well. So this is a dynamic that's here to stay. I think we can imagine, without any shadow of a doubt, a far more hybridized future where developments in real life, whether in gallery spaces, at fairs, are put in parallel with tentacles that further contextualize them, that add layers of services for purchasing, shipping, transporting artworks that are far more efficient and easier than they have been. Again, much of this was already in play, but it was highly fragmented as recently as 6 months ago. I think over the next 6 to 12 to 24 months, we're going to see that become a much more fluid interface. I think the matters that Clare alluded to as well just a few moments ago, with context and narrative creation taking precedence over purely commercial determinations, is an interesting one as well. And I think in their efforts to differentiate themselves from one another and build narratives and storytelling around the artists that they work with, galleries are hyper focused on adding context, on adding that background. And I think we'll see that come through. We've seen how Instagram has helped with this. We've seen how different types of video and all sorts of production have helped this storytelling trend. And I think that will take enormous leaps forward as well as new technologies come to the surface, all of which ultimately will support and service the buying and selling of art online. But that isn't a singular endpoint in and of itself. I think we'll see a much more blended future.
And is that also where you see, because that's quite interesting in the context of Clare, didn't you find that, was it 81% of collectors of buyers like price transparency, and I think only 1% said no. I'd rather we didn't. They like that aspect. So you've got this context side of things, but also the price tag. Do I have my numbers right?
Definitely. I think it's a particularly appealing attribute of this online kind of transacting is price transparency. It's good obviously for new buyers, and it's good for established collectors looking for new artists and advisors, and for everyone. I think, like it or not, people have budgets, and this really helps them kind of focus on the artists that they can afford and that they want to spend money on. And even galleries have said it can act as a filtering process to how much work they have to do. And it was 81% said it was important or essential, and there was another 16 that said it was useful. So 96% of the high net worth collectors, who could be a little bit more immune to price even, said that it was really worth doing. So I think that's something that you can't ignore, and it's just acknowledging that people do have budgets. And I think it's one of those things as well. Once it's stepped over the line, it's been kind of this debate around price transparency has been escalating for years. It's whether it's offline or online. And I think it's another one of those kind of moments where this could give it is the impetus to kind of push that forward even more.
Yeah, I think to echo that, what I hear from our galleries is, that there is, they're increasingly willing in this brave new world to embark on this. Obviously, with our online viewing rooms at Art Basel starting this March with the Hong Kong show, we made prices, or at least price ranges, mandatory for everything that was part of these platforms. I think the challenge still for the galleries is now that collectors have that power, and so that's shifted to them, so to speak. Galleries are still trying to find ways to engage with them and to start those conversations, because of course, as you empower collectors with this information, it allows them to sort of create their own path through this world to some degree, a little bit more independently, perhaps. And I think that, one of the questions the galleries have, especially as they're sitting at a remove and they're not in front of their clients in the same way for the moment as they were previously in their fair booths or in their gallery spaces, is how to create that dialogue, how to engage collectors and take them on that journey. An artwork listed by a gallery in an online viewing room, for example, may be more than a collector can afford, but they may have other material, and it's about how to start that conversation. And I think we'll see a lot more developments in that realm as well in the next bit.
Yes, learning to have conversation again is going to be important. I can see that. Thank you. One other thing I just wanted to pick up on is this idea that the report talks about a shift from global to the local. And again, I think that's something that is gradually playing out. Maybe we haven't quite resolved it yet. But Paul, I wondered from your point of view what your sense was. It's partly by necessity, but what is your sense of this dynamic? And then more broadly, your thoughts about spending in the next, and travel in the next 6 months to a year and a half.
So, I mean, if we look at the global economy, the globalization, at least the structure of globalization that has marked the last quarter century, that's over. And we're seeing a process of localization across many different industries. Now, I don't think this necessarily applies so strongly to art or to luxury more broadly, because the location of the artist or the location of the brand is extremely important to the quality of the brand and the experience of acquiring the art or the luxury good. So I'm not sure that that's quite so strong, but we are going to be in an environment where I think there is less globalization generally, and that may affect some of the fringes of the art world, with potential restrictions on global companies, for example. Now, if we think about where we're going in terms of people's experience globally, I do believe that we will get back to an environment where, yes, people are traveling, they are keen to travel. Humans are naturally curious. We don't like sitting at home in our village in the west of England, however idyllic it may be, forever. Sometime we need to get out. So I think there will be a return back to this. Not in the next 6 months, though, because whilst I think fear of the virus has been contained, it's just the restrictions, the hassle of traveling is still relatively high. And I think that's going to work against the large-scale travel that we've seen. If we look at previous issues, for example, 9/11, not a great parallel, but it is a parallel. Or if we look at the SARS crisis in Asia, what we find is that it does take time for people to get their confidence back, but it does come back. So I would say if we're talking about 18 months, then I think we're back to a more normal pattern of global travel for leisure purposes, at least. 6 months, I think that's probably going to be a little bit too soon.
Thank you very much. And then, really, before I look at some of the questions that have come in, Claire and Noah, I mean, is it fair to say, thinking about that the bad news isn't over yet for galleries, and that there are other pinch points in the short term, and then maybe longer term? What do you think the triggers will be to get back to relative health? Claire, if you want to say
Sure.
first.
I think definitely the outlook for most galleries for the rest of this year was certainly quite pessimistic. Only 21 expected an uplift from the first half to the second half of the year. There was some more optimism for next year, for 2021, but still less than half of the galleries in this that we surveyed, modern and contemporary galleries, expected an increase. And I think, again, a big issue is going to be the winding up of a lot of aids and support packages that galleries have been accessing. I mean, it's been great that they've managed to be able to control things like layoffs and things like that by having access to income supports and grants. But without them, I think some galleries will close, and it is a worry that the sector will start to shrink, and that has implications not just for the gallery sector, but for the artists that were exhibited at those galleries, for all the ancillary services that work around the industry, and for all the related businesses, apart from the galleries themselves. So I think, there certainly people are preparing for not a good period ahead. I mean, I think in terms of collectors, we did see again that most weren't willing to travel, as Paul was saying, the same kind of things being reflected here in our surveys, that they weren't willing to travel that much for the next 6 months, and it would be kind of well into 2021 when they would be willing to travel again. I mean, millennials more wanting to kind of get out and about than some of the older generations. But I mean, there's a lot of some of the boomer collectors are among the most important and established collectors around too. So will they kind of travel? It certainly doesn't look like it for the next 6 months. And then it's just into next year. How long does it take to get people's confidence back? And again, as Paul said, it's about the hassle and the restrictions and the quarantines and the various different systems in place. It's not just the fear, as Paul was saying, it's the actual hassle related to it. So these are all concerns going forward.
Would you say the same, Noah?
Yeah, I mean, I'd echo a lot of that, of course. I think the world is always a bit more nuanced than sometimes is coming through here. I mean, I think one of the issues that we're concerned about certainly is the lag effect. We've seen historically when you stack, art market returns to those of the financial markets, there's already a degree of a lag effect. I think some of these measures in terms of PPP loan support structures in the US context, various in Europe and internationally have dulled that or sort of pushed that back even further. From my conversations with our clients, I think many galleries have a strategy in place to get through the end of the year. They've mitigated their costs. They've perhaps trimmed their staff. They're really focusing, as came through in this data, on servicing their core existing clients and having those interactions. There are some positives there. I mean, they're seeing people maybe that they hadn't seen. The big question I think is going to start coming as we head deeper into the fall and into the early new year is the extent to which that new landscape, so to speak, can continue to propel them ahead, and to do so, especially in the face of this reduced international travel without the stimulus in the near term that the FAIR platform can provide. And so as an organizer, the largest fair platform in the world. That's, one of the reasons, for example, that we're going so strongly into digital, that we launched for the first time ever later this month and into October, 2 new online viewing room platforms that will be delinked from our fairs to help create that stimulus and to try to move the market, and also to service a market that's not just in the hands of the power players in say, New York, London, et cetera, to really try to create calls to action and activity outside of that. I think the proof is yet to come. I think galleries are adjusting to this landscape, and we're all obviously hoping for the best and trying to find a way through a very challenging moment. Again, I think if one was to compare this to that moment, and I think we talked about this when we were last together, about that moment in the early 90s when this new reality came into play. Some of that may yet prove to be the case in terms of those dynamics and the downturn and residual upturn over the course of the 90s. Again, one of the key factors is just the health of the broader financial economy, how that sticks together. Technology is totally transformed the landscape. The global nature of our industry is completely different. And of course, you have the presence now of these mega galleries and different dynamics within the trade that do create a high degree of distinction from what happened before. So I think there's many unknowns before us now.
There are indeed. Thank you for that. I'm going to turn to some questions that relate to what we've been saying, but push you a little further, I suggest. But one question, as we've just been talking about the geography, this came in before our talk, actually. How do you think the economic impact will change the geography of the art market? I mean, this really also plays to what Paul was saying about global and local. Are we going to see the shape of the market changing? Claire, I suppose you would be the first person for that.
Yeah, I mean, I think the galleries in Asia, in terms of sales, had actually saw some of the biggest fall in sales. And this is talking about the first 6 months of the year. So perhaps they're slightly ahead of the curve, if you like. Their issues were much earlier, certainly in markets like Hong Kong. But I think it's been a difficult period for all areas. So it's a pretty global crisis. I think some markets are a little bit better insulated in some ways because they have very strong local networks. If you look at somewhere like New York, although it was obviously has got so much going on even besides the crisis and was so badly affected by it, it has that kind of stable infrastructure of very strong local wealth and all those kind of things. So I think those kind of dynamics will matter even more. Local support. I mean, the worries are the kind of, London is concerned. Obviously, it's an international hub that relies a lot on the movement of works of art in and out of the country for it to maintain the health of that market. It's not about domestic works being sold domestically. It's about things being transported in and out. So, I would worry for markets such as those. And obviously, I mean, all the gallery associations, which are also, I have to thank very much for their support of the research. They've been doing their own surveys. And in France, the CPGA found that up to a third of galleries there could close. So that there's really, I mean, there's difficult places all over. I do think that places that have strong local markets may maintain themselves better. But I don't think there was a few areas, that, for example, there was some Australian galleries that said that they did very well during this crisis.
Yes, because people weren't leaving.
They weren't leaving. They weren't going.
Yeah.
Their big collectors weren't going away, so they kind of had them captured, if you like. So there was a few people that did buck the trend, which is always nice to read. But I think as a whole, a lot of markets are going to be struggling. So it's going to be a really interesting one to follow up on at the end of the year and see how that has played out.
And then another question I'll give to you first as well, Claire, is this: do you think that the cancellation of all these fairs could play into the hands of auction? I mean, do you think it could? I know you didn't cover auction this time, but are you seeing people? They've had some quite big, flashy sales, and that's online as well. Are you seeing people buying more at auction than perhaps as a percentage?
I think the auction sector was already on track to moving much more online,
That's
as it
true.
was, certainly kind of at the lower end, especially, there was more and more auction houses consolidating a lot of their lower price sales into the online sector. And I think that they've done some great efforts and strategies towards online. I think, in the first half of the year, their sales were down at a similar level. So I don't think it's been easier on the auction sector. And, behind the scenes, before the event, they do just as much in-person outreach and kind of sharing information and visiting people and kind of showing artworks and things like that. So it's not a business that can just kind of get away from the personal contact either. So I think both sectors of the market will struggle. But I think the auction sector was already ramping up a little bit quicker in some areas.
More oven baked.
Yeah.
And then, Claire mentioned artists before, and actually maybe we didn't talk enough about the artists and all this, but we've had a couple of questions about how are they responding to this crisis? I mean, are you seeing any difference in the sort of work they're making? Has there been I think I read something this week about artists, being a lot more, making it a lot more productive. Do you get a sense of, I know it's difficult to generalize, but any sense of a shift of how this is good and bad for them, really?
Well, you can't de-link artistic production from the social political scene around.
No, exactly.
So this is a hairy and very complex question with so many different tentacles in a lot of different directions. I will say, certainly in the New York market, I know this to be the case in LA and I'm sure other markets as well. And, Berlin, cities where there are a lot of artists, the lockdown, as Claire opened this report with, has had a huge impact on employment for artists that are bigger commercial artists that have large studios. They have seen a very direct hit to their own production apparatus, which may change that as well. And that's a downside just in terms of the chain link nature of the artistic production. That's upsetting. On the other hand, I think this moment, given all of the encircling social, political, economic concerns behind it, I think is a ripe environment for extraordinary artistic production. And I think we're going to start seeing a lot of that come to the fore this fall and into next year. The Venice Biennial's on the horizon next year. I was in touch with a curator yesterday that's in the process of installing Made in LA as well. I think we'll see things there. We've seen some already bubbling up on Gallery online viewing rooms. The whole nature
You mean a reaction to what the social unrest we've been talking about, as well as the isolation?
Absolutely. Both directly,
that will be interesting.
Right, in terms of explicitly, but also implicitly, just to the nature of the fact that they've perhaps for the first time in many years been able to hunker down and not have to be out traveling as much. It's abstract too. We've talked to many galleries and artists that that have shows that are miraculously going to open in faraway lands, and for the first time ever, artists can't get there to see their exhibitions or to help install them. So that's a strange dynamic too. But the very nature of us focusing on these online viewing rooms starting in late September with work from 2020 was about creating a platform to throw a lens onto this production. And so we're very excited about that. But this is, this is a moment, we've seen this historically in so many different periods where moments of real tough challenges have yielded some extraordinary types of production in totally new ways, cross-disciplinary as well. So I think we will see that. But for the near term, it is challenging, and many of these economic effects have had direct consequence for how artists produce and ultimately disseminate their work.
Yes, I agree. And then back, you mentioned your new OVR, and there's a question because you are charging for the first time. You're actually Basel. This is charging for exhibitors to participate. About, is it 5,000 Swiss francs each?
5,000 Swiss francs, yeah.
And someone has asked, do you foresee a change in, towards paid participation? I mean, is this one way that the business model, for fairs, but also could galleries start charging for content?
Yeah, I mean, I think that to some degree that's inevitable and is coming in our conversations with our clients. I think they understand that that's coming. And it's not a cynical gesture either. Digital means cost a lot of money to produce, to maintain. The marketing effort behind that is absolutely immense. So, that this will be clearly the case for these next two viewing rooms. We've already let our clients know that for Miami Beach in December, we will charge. We haven't announced neither the concept nor the pricing structure for that, but I think this is a fixity for the future, and will ultimately change well beyond Art Basel in terms of the landscape with which galleries and institutions use digital means to advertise, promote themselves, and again build their story, not just in print and in the real, but through the tentacles of the internet.
So we have to end the session. We're often accused of being too positive, but I've had one question that says, "Can we end on one positive perspective takeaway from each speaker, please?" So I just wonder, maybe Clare, Noah, Paul, if you can give us one positive thing to sleep a bit better with tonight. Clare?
I was going to just put up a slide from the survey that showed. Now, I know this is a bubble of people. It's high net worth collectors in three very active markets, and so they have to have kind of high personal wealth over $1 million. But one surprisingly optimistic thing that came from the report was just the level of activity. I mean, nearly everyone had bought something in the last 6 months. I mean, 86% of the ones we surveyed across the three markets had spent over 50,000, and 16% had spent over $1 million. So there is activity happening, and there's a high level of spending, especially in younger collectors. So people are engaged, and there's actually very little difference in the prices they're paying offline versus the prices they're paying online for the last 6 months as well. So I think there's activity. It's again about just getting noticed and signaling kind of quality and all these things online. And I think this is where the online viewing rooms come in a little bit, because there's such a sea of information. It's that vetting. It's the same in your industry and in kind of media and things like that, and publishing. There's such a sea of information online. People will now pay to have quality. So I think again, it's getting noticed for things like that. But I think it's not all. It's certainly from there is people willing to support the market, and it's a little bit different from the financial crisis in that there is people seeing that galleries have a really important role, that they need to be supported through this as well, more than in previous crises. So there is activity going on in the market that's still maintaining sales for some galleries, which is very positive.
Yes, I found that a pleasant surprise too. Mm-hmm. And Noah, do you have any pleasant surprises?
Absolutely. I think that this finding that I mentioned earlier that came through the report about COVID actually inspiring people to get more engaged with the market is profound. And I think we'll see culture, live experience come so much to the fore. I've seen and watched as museums have started reopening, people like crying in galleries because they're so happy to be back in these really special places, often for the moment, at least, without many other people alongside them, which is an extraordinarily unique experience. So I think culture will come back with a vengeance, both in the gallery landscape, in the fair landscape when that's able to get back online, but in the museum realm as well. People want these experiences. Culture matters, and it matters in this kind of environment with so many other distractions and with so much uncertainty in other part of everybody's lives. And I have a profound fundamental belief in that. And I know that we as an organization do. And I know that the galleries we work with and the great artists that they present, fundamentally believe in this. And I have every confidence that there's a firm fixture for continued investment in and interest in everything we do, heading into what is still an uncertain future.
Thank you, Noah. And Paul, do you have something for us to hold on to?
So I think one of the things which has been really extremely, extremely striking since the end of lockdowns is that across many economies, we have seen an absolute surge in business creation. People are setting up small businesses, it may be just an internet-based business, whatever it is, but people are setting up their own businesses. And what that signals to me is a general degree of confidence in the economic future. You do not go to the hassle and expense of setting up a small business, even if you're just selling some stuff online. You don't go to that trouble if you're not more confident about the future. And it comes back to the point that we were discussing when we last all got together, that we always underestimate how much people can adapt in the face of changing circumstances. And that applies to us as consumers, to us as employees, and I think it also applies to the art market. The future will be different, but different is not necessarily something to be scared of.
Superb. Thank you very much. And thank you for whoever asked that question, because I feel a bit better than I did 5 minutes ago. But also, I am sure we will have more to talk about in 4 months' time, or at least I hope we do. But thank you so much, Noah in New York, Clare in Dublin, Paul in a small village in the west of England. You've been superb and very, very thought-provoking as ever. And have a good rest of day. And thank you all for listening. Thank you. Bye-bye.